So inflation is on the rise. The Fed is saying 6.7, 6.8%. It's transitory. Oh wait, no, it's really not transitory. It's actually here to stay. Well, the consumer price index is not exactly an honest number, right? They've actually changed the way that they count inflation twice at least since 1980. So if you use 1980 metrics, according to Shadow Stats, inflation right now is actually above 15%. And if you use 1990 metrics, it's actually above 10%. So inflation is high. That means by you just leaving your money in a bank account, you're losing between $6,700 and $15,000 on $100K sitting in the bank. Ouch, right? Painful. So the question is, what do you do with your investments? It really depends on where you think inflation is headed. Are we going to go back to kind of a normalized level of inflation? Is inflation going to continue to pick up? I'm going to give my prediction on what I think about this. Also going to share an exciting quote that you're going to like. So go ahead and smash that like button and let's jump into it. Okay, so option number one is inflation drops. So we have a drop in inflation. Things go back to somewhat normal. We come back into instead of the 6-7% inflation, we go back to a 2% or less, and what that would look like. Well, before we get into that, let's talk about inflationary and deflationary forces, because they're both at work in our economy, in the monetary system, and it's really important that we understand them both. So there are things on this side that are inflationary. One thing is all the QE that's happening, all the money printing, 40% and all the money was created in the last 18 months. That's very inflationary. You also have velocity of money has started picking up. You have debt has increased. Stimmy checks, people getting checks for having children, people getting checks for just not making any money. The government has become someone that hands out checks to people. Those are very inflationary things. Also for business owners, there's been the PPP, which is a program designed for entrepreneurs and business owners to be able to get loans or get money very cheaply, and some of that's not forgiven. These are all very inflationary type of things. Now, on the other side of that, you have deflationary things. So what is deflationary? So it's when we have a drop in inflation. It's deflationary. If the economy slows down, we have some sort of slowdown in the US economy, that is a very deflationary event. If the velocity of money, people start saving more than they're spending, then that's definitely going to impact. If interest rates go up, now the Fed has said that they are going to raise interest rates. They're kind of sneaky. They've said they're going to do this before, but I think they seem like they're serious about raising interest rates 2 to 3 times in 2022. So that potentially means that debt is more expensive. It discourages borrowing. Things just that it's a deflationary type of move, right? So that can cause deflation. Not to say this is actually deflationary, but it can cause some deflation. We also could have the potential of a black swan event. Now, COVID was a black swan event, but there could be some other type of event that really rattles everyone, and the Fed is not able to stop it. There could be a global slowdown. We've seen this a little bit with some commercial real estate that some of the debt has gone bad in China and other parts of the world. So the thing I will say about this is whether inflation goes up or inflation goes down, we have not felt the pain of COVID. We've only seen more money and more relief and different things from the government, which is part of the reason why I think we have a pretty significant level of inflation. And so what happens if we start to feel the pain of COVID, or for some reason, they're not able to prop things up, or we get a crash in the stock market or other things? Those are things that, at least for the short run, can be very deflationary and actually cause, inflation to go down, because then things could change. So we'll get into, there are some long-term trends that I believe are very inflationary. You can look at the last 100 years, you see it. And then there's some short-term risks that are potentially very deflationary. And I think both are important to pay attention to. So let's get into number 2, learning more about how inflation could continue to rise. Okay, so this is the second option, right? So inflation, instead of going down, inflation keeps going up, right? So what does that actually look like? We talked about the inflationary forces, the QE, the money printing, 40% of all the currency that's was created in the last 18 months or so. Milton Friedman said that inflation is anywhere and everywhere. It's a monetary phenomenon. What that means is the more money you print and the more money you create, the more inflation you're going to get. Like, that's just kind of how inflation really works. And a lot of people that believe in this modern monetary theory, or MMT, really don't believe that's the case. They're like, oh, we can print as long as we don't have inflation. We can print. but I just really think it's not true. We saw in the past this taper tantrum where the Fed in the past had said, oh, we're gonna taper these rates. They started tapering, then the stock market started to come down. There was just a bunch of issues. So then they said, okay, we're actually not going to taper, and then they went back to just doing QE even more. So the question is, are they going to taper? I think they've said that they're going to. I believe they will actually start to do it, and I think they're just going to have to deal with the consequences because they're out of options, right? If they don't raise interest rates, inflation goes even higher, which a lot of people don't want. We also have this 120 trillion in estimated unfunded liabilities. What does that mean? Medicare, Social Security, pensions, these type of things. We don't know exactly what this number is because it changes, right? So as inflation rises, this number will actually go up. So this actually is much, much larger than the national deficit, and this is unreported. So there's a lot of off-balance stuff that we owe money as a government on. So again, this is all very, very inflationary stuff. Now, COVID, what's happened, which I think is really interesting, is that COVID has led to less productivity. And what that really means is we've paid people to stay at home. And it happened for a couple months right when COVID hit. Depending on where you live, it's still happening or it's happening. But productivity as a country has gone substantially down. The amount of productivity, the amount of money people are spending is one thing, but just the amount of stuff that we're producing. We're having to import more and more stuff. There's a lot of businesses that have really been hurt. And so you have basically this recipe. You look at what's happening in the port issues. You got all these boats that are stranded out there. They can't find a way in. There's a multifaceted side of that. You can't find enough, truckers to pull the stuff. There's containers. There's different supply issues. But one of the real issues is that, again, when you print money and then your productivity goes down, you think about that, you're producing less goods and services, but you have more money. So again, that's just an equation, right? So if you have a steady fixed amount of dollars and you have the same amount of goods, nothing changes in price. But if you increase the amount of dollars and instead of leaving the same, you actually reduce the amount of goods and services that are there, that's a recipe for substantial inflation. My prediction really is that inflation will not only continue, it will continue to rise. Government may try to fudge those numbers as they've done, which I think inflation is substantially higher than what they say it currently is. So anyway, that's something to consider. Now we're going to talk about strategies and things you can do to take advantage of it. Okay, so this is the final step. How do you take advantage of inflation, or how do you do things that are going to benefit you in an environment of inflation? So before we get into this, just want to say, give a little disclaimer. I'm not an investment advisor. I'm not your investment advisor. These are just educational thoughts. These are my own opinions. Obviously, consult your own professionals before making any investment decisions and use common sense. So a few things to avoid when you look at an inflationary environment, right? I personally feel like stocks, now people will argue with me on this and say, no, stocks are great, you should be in stocks. The stock market right now is just the PE, the price earning multiples are super, super high. It's gone up 4 or 5 times or more in the last, 4 or 5x in the last number of years. You can make the case that it can be long-term. It can continue to go up. I think we could experience some pretty significant volatility there. I'm not going to get into the reasons why right now, but I've done some other videos that talk about why I think stocks are really not the best place to be in an inflationary environment. Also TIPS, which are Treasury Inflation Protected Securities. I believe that's what it stands for. This is the federal government saying, we're going to protect you from inflation. And inflation, by the way, is what we say it is. So we'll say it's 2% when it's actually much higher, or they're saying it's 6.7 or 6.8% when actually it may be way higher than that. So I would say avoid these because you're still going to have a loss just based on inflation because they underreport inflation. I would stay away from bonds because bonds become less valuable if better bonds come out. So bonds with higher interest rates come out. Bonds that you currently hold are worth less. So that's something I would say watch out for. I would even say single family. Now I put a disclaimer here. Single family is not a bad investment. I think right now there's a chance that with affordability, with interest rates being so low, if interest rates rise, affordability goes down, and there's some risk that this could have a crash. I actually did a video about why I think single family at some point in the near future is going to crash. You can check out that video up here. But again, I would say just watch out for single family, just because, again, it's had a great run. We've had, it's very market specific, of course, but in California, we've had some places that have tripled in the last 7, 8, 9 years. It's just sometimes what goes up must come down. The long-term trend of single family and stocks are inflationary. It will go up, but I look at short-term volatility, and I think there's a chance some of the stuff could move quite a bit. Over here, I look at inflation hedged assets, right? Getting yourself positioned correctly in inflation hedged assets. So multifamily, I love it. I call it the bread and butter of investing. It's just so great. I think everybody should have some experience with it. You get to use debt when you buy it. So not only is it an inflation hedge, it's actually an asset that pays you to hold it. So you hold the asset, it pays you money to hold it, and then it appreciates based on inflation. And you have debt, so you don't need to put all the money down. So for example, if you have a $10 million property, you put, let's just say $2.5 million down, and the property appreciates over a few years to $12.5 million. Well, you haven't increased 25%, you've actually increased 100% of your equity, plus you've gotten some cash flow, right? Because you've only put $2.5 million down, and there's now an additional $2.5 million that's a part of that, which is really awesome. If you're interested in learning more about multifamily investing, you can check in the comments below. I have this awesome report that I loved putting together, and I think you're gonna love it. So check it out down below, and you can click that link for that free report. And then another thing is commercial real estate. So there's other types of commercial real estate, such as self-storage, other sorts of commercial real estate that I think there's some great inflation hedging there. I want to share this quote with you, though, that I think it's really valuable. I think you're really going to enjoy it. But it talks about inflation. It says, inflation takes from the ignorant and gives to the well-informed. And that's Vanita Van Caspel. Inflation it really is a robber. It really steals from people, particularly poor and middle class. It kind of really makes me angry sometimes, but I think when we really think about it, it's important that we talk to other people, we educate people on what they can do to prepare themselves for inflation. So I encourage you to share this video with someone else that you think might benefit from it. Also, you can check out this video that I did here about how to make a fortune off of inflation. I went into some more of these strategies. I actually spent the whole time going into strategies of what you can do in an inflationary environment to help make money. So if you made it this far, consider subscribing. We do videos basically about these topics: inflation, macroeconomics, investing, real estate, and just love bringing value to you. But I'd love to see in the comments below, just what are you doing to prepare for higher inflation? What are some things that you're doing? If you could stick that in below, that would really serve our community, and we just love the dialogue that happens when people contribute their thoughts. So please put that down below. We'll look forward to seeing you on the next video.